If you've been following me for a while now, you know I create a lot of video content, and I cannot begin to tell you how impactful it's been for my professional career. If you want to build your brand, there's no better way than to create video content. And my company, The Content Store, helps business thought leaders do just that. I created The Content Store to help folks cut through all the trials and tribulations that I went through and fast forward right to the part where they're producing premium video content. The Content Store specializes in 3 types of content: podcasts, YouTube videos, and short form videos for social media. We believe in 3 key pillars when it comes to creating video content. Number 1, it has to capture people's attention. Number 2, and this is a big one, the video should provide value to your audience. And finally, number 3, we think your content should be authentic and showcase your true authentic self. Let the Content Store elevate your personal brand and begin your content journey today. Go to thecontentstore.com for more information. Hello and welcome back to the Art of SBA Lending. I'm your host, Ray Drew. Today we're talking about what it really takes to create raving fans in SBA lending. I'm talking about borrowers who leave that closing table and can't stop talking about how great their experience was with their SBA lender. They tell all their small business owner buddies, the referrals start pouring in. Sound familiar? No, of course it doesn't. Here's the reality of the situation for most banks. I'm talking about the overwhelming majority of banks. Hey, Mr. Borrower, I need X, Y, and Z. Now I need A, B, and C. Oh, B is wrong. The liabilities aren't adding up. I also need D, E, and F. Why isn't E reconciling with F? Oh, and by the way, the interims are in cash. I need them in accrual. Also, I'm getting no record found on your tax return here from 3 years ago. Can you call your accountant and find out what happened? Oh, he died? Oh, call this 1-800 number to the IRS. Also, the searches are in. It says here you had a BK in 1993, but you marked no on this form. So are you a liar? Okay, here's the commitment letter, but we can't close until you give me A, B, C, D, F, G, H, I, J. Yeah, another checklist. This process is not fun. So by the time you get to the closing table and you fund the loan, the borrower has had enough. They're ready to move on to do whatever it is that this loan helped facilitate. Now, if you answer your phone and you're not the reason for delays and you follow through on what you say, chances are they're going to leave the process appreciative of what you did. But they're also going to feel like they went 9 rounds with a boxer. So my question is, how do you take customer service to the next level? And despite all the rigmarole involved in SBA, leave that borrower feeling like getting referred to you was the best decision they ever made or the best referral they ever made. The answers are simple and straightforward, and we're going to lay them out today. The phrase raving fans was coined by Ken Blanchard and Sheldon Bowles in their 1993 book titled Raving Fans, A Revolutionary Approach to Customer Service. And in this book, they outline a customer service strategy focused on exceeding customer expectations and creating enthusiastic advocates for their business. The concept emphasized turning satisfied customers into raving fans who are loyal and actively promote the brand to others. So without further ado, here are 5 ways to create raving fans in SBA lending. Number 1, have empathy for the borrower. Put yourself in their shoes. This can be hard for people that have not been on that side of the table, but in essence, you need to understand your customer. I'll give you an example. When you request a document, think to yourself, what happens next? If you know you're financing a business acquisition for a buyer who is buying a business from a 90-year-old who has paper records, and your underwriter asks for June financials when you already have May, and you're sitting in July. Sure, it's a nice to have, but the reality of the situation is by sending that email, your buyer is going to have to drive across town, sit down with the seller, explain what the bank is asking for, and it's going to take 2 weeks. This is one of many examples I've encountered over the years. It's hard to put it all into words, but it boils down to the fact that for the small business owner, every communication we put out impacts their lives and their livelihood. And it could seem small for us because it's 1 out of 100 emails that we're going to send on 1 out of 100 deals that we're going to do every year. Empathy. Number 2, align yourself with the borrower. Get on the same team. Make sure that they know that you're in their corner. Often we're going to throw problems at the borrower for them to deal with. And put the deal on hold while they figure it out because we're busy. Is that going to create raving fans? No, of course not. The situations that can be most inconvenient for you are actually the most ideal situations to make raving fans. If there's an IRS issue, for example, the idea of my borrower sitting on hold with the IRS for 2 hours waiting for them to answer, with the potential that they won't even solve their problem, almost ensures that their SBA experience, despite it not being your fault, will be perceived as crappy. Here's a quick story. I was in the process of transferring all my investments to a financial advisor, and they give great customer service. And we had one call with one of the investment companies that had some of my money, and we had to transfer things over. And so they called them. They waited on hold for me. I kept working. And when they answered, they looped me into a three-way. And I thought that was just incredible service. Number 3, do the unexpected. This is one of the easiest ways to create raving fans. All it requires is paying attention. In the book Unreasonable Hospitality, Will Guidara tells the story about how when he was running 11 Madison Park, a server overheard a patron reflecting on their trip to New York City and how the only thing they didn't do was get a dirty water dog. And the waitress who overheard them ran across the street, got a hot dog from one of the street vendors, and delivered it to that customer, making their experience totally special and unique. Think about how many people they must have told that story to. If you can do that one or more times throughout the SBA loan process, there's a pretty good chance you're in the process of creating a raving fan. Number 4, you need to deliver value. Customer service aside, the product itself, whether it's the rate, structure, terms, or just the fact that you got the loan approved, can be an opportunity to create a raving fan. The obvious one being the borrower who had the door slammed in their face by their bank. If a borrower gets declined by one or more banks and then it's you that allowed them to get that deal done when others wouldn't, that's a surefire way to create a raving fan. And sometimes it just takes listening to their story. And the same goes for the incredibly low rate, by the way. I'm not a rate guy, but that's one option to create value, as well as low down payment and structural advantages and things like that. I mean, these are all ways to have a product that is going to have the borrower spreading your good gospel. Finally, number 5, being a connector. If they come to you and you bring in a competent attorney and you recommend a solid life insurance company, or perhaps they have a financing request you can't do, but you take the initiative and find the lender who can, and the borrower recognizes that, you're making all of this happen, and that helps solidify you as their go-to person. So that's my 5. I'm sure there are many more, but that's a good place to start. And to be quite honest, I don't know any banks or institutions that consistently create raving fans in our industry. I know BDOs that do, but I don't know any banks that consistently do it. And that's because most banks are operating in the same playbook, and that playbook sales strategy starts and ends at the sentence, hire BDOs. Now, as much as I think this is a possible strategy to adopt and embed into your SBA division, part of the problem might just be there's a massive disconnect between what it takes to get an SBA loan to the finish line and the expectation of our borrowers today. I heard one SBA borrower the other day who defaulted and got foreclosed on, and they were complaining about their SBA lender. He said they were fantastic all of the way through pre-close, all the way up to the closing table. But when his business was struggling and the borrower is selling themselves as much as we're selling ourselves, and we need to get this loan paid back. But something tells me if you make the investment to focus on these things and you create emotional connections with the borrower during the origination process, not only will you create more raving fans, but you might just get paid back too. With me today, I have a panel of Art of SBA contributors: Javier Jorge, Director of Government Guaranteed Lending at Locality Bank; Charles Green, Senior Vice President at Harvest Small Business Finance; and Chris Hurn, author, founder, father, and small business lender. Folks, welcome to the show. Chris, I'm going to go to you first with this one. Why is it so hard to create raving fans in our industry?
Well, you sort of said it in your preamble there. I mean, in the example, well, first of all, why would anybody respond favorably to, you telling them that, you only got X, Y, and Z and you need this. And it's just kind of gruff, right? But I do think that's the experience. And some of that comes from the fact that our industry attracts analytical people, not necessarily people with high emotional IQs. And I think that's really important that we try to put ourselves, as you said, in their shoes and have some empathy. And when we have to deliver bad news or challenging news, we do it in such a way that is humane. That's how we would want that news delivered to us, not rough and, gruff and, almost condescending and that sort of thing. And I'm afraid far too many lenders do it that way, the non-humane way, I guess.
Yeah, it's the communication, and it's adding that, especially email, right? It's like email comes through one way, and I mean, they didn't teach that in school about how to, make your emails how they come across. Javier, is it fair to say that there's a disconnect between expectations and reality? And if so, why do you think that is?
I think you hit the nail on the head, Ray. At the end of the day, I think today's borrowers are accustomed to a whole different experience, given today's technology and advancements across all other industries, it appears. Yet banking, because of its high barriers of entry, regulatory constraints, capital constraints, and furthermore, even in our industry, the nicheness and the complexity gives us the ability that, if you're doing an SBA loan, you got to talk to an SBA lender, right? So it's kind of, unfortunately, you have to play by our rules to play. Now, most industries do their best to accommodate the user experience or the client experience to maximize the outcome for them. I think this is a great opportunity for all of us in our industry to reinvent or re-envision that user experience, that client experience, to have those raving fans, to your point, Ray.
Well, we're not there yet. So Charles, how do you think that the majority of borrowers feel after going through the SBA loan process?
I think they're exhausted and confused. And if they wind up with the money, they're glad for that for a minute, but they're spent. I'm going to go back and loop a thread back to an earlier conversation we had this year's season is third-party origination. You, the bank, are going to get blamed for whatever that outcome is, even though it may be the broker who you've allowed to be in the middle of this transaction and who's kind of driving the face time with the client. They can be a good filter or a bad filter, or in and of themselves a problem. And you get blamed for it because they don't remember that broker's name so much as they may remember the name that's coming to their invoice and dipping into their checking account every weekend or every month.
Yeah, and we got a lot of interesting feedback on that. So definitely check that one out. That'd be our broker compensation episode.
I got a bunch of broker calls. Isn't that funny? They want to talk to me.
Oh, okay. All right. So we're going to talk about how to go from creating good borrower experiences to creating raving fans. But some shops haven't even gotten to good yet. So Javier, let's start with the basics. What are those things that banks are doing or not doing to create good borrower experiences compared to the other banks who are giving the bad borrower experiences, in your opinion?
Look, I was taught early on that the only true competitive forces in our industry are speed, service, and certainty, right? So what I challenge every institution that's just starting or trying to get their shop up off the ground is you need to give those three pillars strong consideration. And that's an internal focus first, right? Whatever you're committing to your borrowers, you have to make sure that you can meet those expectations. Because the last thing you want to do is overpromise and underperform, right? Because at the end of the day, that could be the horrible experience. It still might come out to a loan, which unfortunately is what most of our industry looks as a success, but it would be comparable to like pulling teeth from the experience of the borrower's perspective. How can we reduce that friction? Well, it's by being prepared, right? Understanding all of the foundations that you're going to be leveraging in order to provide this product and service to your community. And that, I mean, this could be a whole nother episode, right? But building, your shop from the ground floor with the different components to be able to provide those three pillars. But at the end of the day, you can't go to market with promises. You have to get to market with execution.
If you've been a fan of the show for a while, then you know one of my favorite companies to work with is Rapid Business Plans. Last year alone, their business plans helped facilitate over $600 million in government guaranteed lending. They're on track to beat that this year. More and more small business lenders and their borrowers are relying on Rapid to help with the business plan, projections, and assumptions because their team goes the extra mile to ensure everything is done fast and done right. And that helps streamline the process. They're great at export business plans, by the way, which are critically important at protecting that 90% guarantee. Rapid also offers feasibility studies, which tells you if the project is, feasible. I would recommend these for any large startup loan because it protects you and it protects the borrower and helps you get more good deals done. Go to rapidbusinessplans.com to set up your Get Acquainted call today. Find out why so many top producing BDOs recommend Rapid to their small business borrowers. We're going to leave a link in the show notes just for our Art of SBA listeners. Now let's get back to the show. Charles, what about you? What are some of the top things that SBA shops do that piss people off?
Well, from my observation, you can follow those three things that Javier just mentioned. They take a lot of time for little feedback and waste your time waiting. I have a 504, what I thought should be a 504 transaction. And I talked to a CDC about it because my shop can't do it. And he gave me the name of the bank who is their top partner. And I reach out to this guy and call him, and I don't hear from him in 10 days and doesn't answer his emails, and he's on vacation. Okay, so I wait another week and I don't hear anything, and always got COVID. And then I wait another week and I reach back out to the CDC, and finally 5 or 6 days later, they email together and copy me on it saying they're going to talk that Friday. Another week goes by. It's been a busy week. He'll call me next week. That was 10 days ago. I mean, and I'm in the trade. I just want to know, what's the feedback? Do you see this deal? Do you not see this deal? And I have my answer. Uncertainty is like if you string somebody, we do a horrible job of training people in a very complex product. Thank God we're not building rocket boosters or train tracks, or catalytic converters. But we've got a bunch of people out there on the street, and all they are told is just go find deals. We'll put them together. We'll make them work. And they go out there and they answer questions wrong, and they interpret inside and outside wrong to the client. And client has got this expectation built up, and we go along 8-10 weeks and, we can't do it. And then take away the empathy and see you later. And then accuracy. People don't know what they don't know. They don't do this every day. They don't know the importance of why do we have to have an operating agreement? I've been in business 12 years. I don't have no operating agreement. Why do I need one now? Well, because you do. And there's an easy way we can make it easy for them, as I do, hand them one with their name on it. But we don't have
disclaimer. Charles, man, I'm so glad I invited you to this.
You need a little irreverence.
You're fun to hang out with. So awesome stuff, man. Let's get it back on the tracks here. So yeah, you're right. When I went out to be a 7A BDO, I was trained to get the deal off the street. Certainly at age 23, I did not know a whole lot. First of all, I'd never done a 7A loan in my life. So what am I even doing out here? And there's some of that, everyone's a little bit different. So you're right. But I'm going to go to Chris now. And I just want to exhaust this topic of just the no-nos kind of things, just to get to par. Did we leave anything out of what banks would need to do to kind of just get to that level of just being good?
I always say to my people, we have to understand that this is probably the largest purchase of our borrowers' lives. In most cases, it's even more so than, buying a house. And as such, to Charles' point, they don't do this every day. We do. They need some handholding. And, we need to, in this business, you need to be willing to do it. I think setting expectations is critical. Talking them through. I think Charles didn't quite get to where I was going to go, but, connecting the dots. Why do they need an operating agreement? Here's the reason why this is important for you. Okay. Whether it's good business practice or it's an SBA requirement or what have you. And having a process for these things, and truly training and developing your people to think of it like this. Don't think of it like some ordinary conventional banker who's, like I said earlier, is gruff and just, is blunt and direct and doesn't explain things and just wants to move on to the next deal that, they have no question about repayment ability. Obviously, that's not us in the SBA world. All of our deals have a little bit of hair on it for the most part, and it's our job to try and figure out a way to solve that and to try and get that deal done and do it in such a way that we can hopefully develop raving fans in the future.
Yeah, I mean, that's exactly right, because it's the empathy point is the one I really want to hammer home, because these aren't just deals on a pipeline. Every single deal, and I've heard you say that before, Chris, and I've probably stolen it. This is the biggest purchase of their life. This is a big deal for them. We should act like that. And that gets sometimes muddied with when you're running the shop and you're trying to manage your P&L and you're trying to say, we can't have our people spending resources on this deal. It's too much. It's a small deal. Like you're dehumanizing it. It's like the opposite. That's kind of the two forces that are kind of playing against each other there. But let's get to the good stuff now, Chris. How do we as SBA lenders create raving fans? How are we going to take this to the next level? The types of fans that are going to leave the closing table, scream from the rooftops. Everyone has to call this bank to get an SBA loan, that type of thing. Is it even possible? What can we do?
Well, like I said, I think you have to have a process for this. I think setting expectations correctly is very important. Perhaps even setting expectations that you can consistently beat. People pay attention to that. Being accessible, that's really important. Getting back to people quickly. Obviously our industry is not known for its accessibility and follow-up. And, it's not uncommon for a banker to take days to get back to someone. To Javier and Charles's point about, deals that are sent in and they'll get looked at for possibly weeks at a time. I mean, I think that's, I don't know if it's criminal, but it's definitely not a good way to do things. You're never going to produce raving fans in that regard. So, there's just a number of different things you can do. We like to follow up with our borrowers post-closing with, a thank you card. We like to send them an anniversary card on the anniversary of their closing. We encourage them to say nice things about us, send them a link where they can leave a Google review, for instance. We try to be thoughtful about the whole process because we do want to turn them into a raving fan. We do know that they have other entrepreneurial friends who may need our financing as well in the future. And so that's the real benefit of it. Yes, there's the humane element. You want to have fun in what you do. You want to treat people as you want to be treated. But at the end of the day, you also want all these things to bring you more business. So you need to have a process to stimulate that.
Like our business it's simple to really get ahead. Like that's why if I was able to do it, anyone could do it. Because all I did was answer my phone, return my emails, followed through on what I said I was going to do. Like those basic things can get you to good. But I'm right now, because I've got that down, I'm really fascinated with like, how can I create raving fans? And I want to go to Charles with this. And I'm just wondering, like, what else can banks do to create raving fans?
Well, I think what Chris led off with is important. And I think one word to encompass all of those attributes would be a culture. And that only comes from the top. You can't start that from the bottom up. It's got to come from the top down. And if your bank or your department management isn't sold on that concept, it's not going to go anywhere. But what an individual BDO can do is you can create your own raving fans. I've always held the position that I work for myself. Now, I'm a W-2 at this moment in my life, and I've been W-2 most of it. But I'm really out there working hard and thinking, strategically and getting up early, staying up late for me. Because that bank can disappear or they can disappear me from it tomorrow. but I still want to be in business with the same, prospects and the same pursuits and the same goals. So my practice has always been create raving fans for me. I can't be responsible for the bank. That's not what they've hired me to do. So, I don't use third-party originators, and it's much easier for me to manage all of those relationships. And with, 4 different clients who've brought me 4 loans and half dozen that have made 3 loans and a couple dozen have done 2, one that's done 5, I think I'm getting some progress in that way. And what I do is what we've talked about. I set expectations. I move on it quickly. I don't ignore your phone call. I take every phone call, whether I'm out on the town or if I'm in London, England, or whatever. And I'm responsive. And over as many years as I have done this, I have no excuse but to be competent for it. Those things you were talking about, Chris, that doing for your client, those little things, so that they don't have to figure out. Imagine, I mentioned operating agreement a minute ago. You send somebody to an attorney who says, well, you're going to need to set up a corporation and you're going to need bylaws and get your employer ID number. Well, they can call 500 different lawyers from what used to be a phone book, and they're not going to have any of that for 30 days. My deal has just been kicked down the road 30 days. If they're under contract, they don't have that kind of time. I mean, I set up a corporation for them. I get an EIN number for them. I set them up with bylaws, and I say, have your attorney review this. I don't practice law, and I'm not charging for it. But that keeps the ball rolling and keeps the deal moving. And it's those kinds of little things that you can add up. If you look through your checklist of all the information you need, those are the kind of shortcuts you can take to help your client, so it's an easy process for them to get the capital that we can get for them.
Yeah, and a couple caveats there. One, Charles is really one of the best at creating raving fans as a BDO, and it definitely is having to do with his extreme hand-holding. One of the deals we did was it required the hand. It just wouldn't have gotten done if it wasn't for Charles. And he does a lot of daycares and stuff, it's not like this is a $2 million EBITDA business acquisition where you're going to have, you're probably not going to take Charles's operating agreement, but on some of the more simplistic businesses where they don't even know where to start, I can understand how that could be hugely helpful. So Javier, do you care to weigh in here in terms of, what you think bank could do to create raving fans?
So I've been patiently waiting because this has been the question I've been waiting to answer. I have very strong opinions on ways to improve our industry. And I think it really ties to your point, Ray, earlier on about creating more value than just loans and deposits, right? And I think about all the information that we collect from a borrower. And I think about what we used to do in our industry, right? So I think it's a combination of new tech with old school philosophy. And what do I mean by that? Well, I think that information is important. I'm of the school that more data is better, right? So I want to collect as much information from our borrowers, but in exchange for that information, outside of a yes or no for the loan or whatever service that they're inquiring about, I want to give them more value beyond that, right? So it used to be the day where your community banker would sit at the table with you, with your attorney, with your accountant, and you would sit down with the business owner and talk about where are you going to be next year, where are you going to be 2 years from now. That consultative value, that doesn't exist anymore. The BDOs, and Charles and Chris, I think you guys are examples of this, where you're providing a relational approach to these businesses for the long-term benefit of not only the business, but also the relationship between you and the institution. I want to take that to another level where that information is also valuable to help the business access resources in their community, access grants, access government contracting, employing workforce assistance. These additional values with the same information that is collected will enhance the entire experience of the borrower. And furthermore, in a long-term relational perspective, it should reduce the risk of that borrower, because if you're helping them find new business, if you're helping them improve their margins, if you're helping them improve their operations, in theory, what that's going to mean is they're going to have a better opportunity to pay us back, right? And then work on the second loan. My whole philosophy, and what I'm trying to do here at Locality is build this at scale to be able to put my thumb on the scale and help my businesses succeed. But that's active management. That means consistent data collection from the borrower, but providing more than just the loan, right? And not every borrower is going to want to participate in that, but those that select into this type of relationship tend to have in my personal experience, better outcomes and better customer experiences overall.
Well, it's point well taken, but also the other force there, the devil's advocate, is if you're using the traditional BDO approach and BDOs are incentivized to do as many deals as possible, not to create as strong of a relationship as possible, I think, and so you can sit here like I did today and get on back to back Zooms and, get 7 new deals and, you're just kind of cranking through it. So if you hire me, you're not going to get that. But if you hire 2 of me, where you can now do what I do, but with 2 of me, they now have double the time to spend with each client. However, the cost becomes prohibitive. So you've got to now bring in your own people, which is kind of like what Chris did, in his models in the past and what Javier did at his credit union. So you're able to actually bring in your own people, train them. So it's all kind of going together. These episodes, there really is a string because it goes through culture. It goes through bringing in fresh blood in the industry. I feel like this whole entire Town Square season is coming to a climax here. I'm getting goosebumps. And, this is a G-rated show, so I'm not going to say anything else. But yeah, that was good. Chris, I know you've been thinking about this for a long time because you've written on this. Do you want to tell the story about what was it, a stuffed elephant?
Oh, you talk about the stuffed giraffe, Joshy the giraffe?
Yeah.
Yeah. So, real quick, you can Google it. There was an article I wrote in Huffington Post years ago, and there's a part 1 and a part 2. But basically, the short story is my son, who, if you look behind me, is now a Marine. I know, Ray, we're getting old. He left his stuffed animal at a hotel. It was actually at the Ritz-Carlton in Amelia Island, Florida. And I wasn't able to be there. I was at a conference, and I came back that night. My wife and kids drove back, and he was distraught because he left his stuffed animal behind, which is something that I'm sure a lot of parents who are watching this have had a similar experience, right? And that's fine. Well, I basically did the old parent white lie and consoled him and said, we'll get Joshy back. He's probably just sticking around visiting, right? He didn't want to leave the vacation. So that put in my mind the idea when I called them that night and said, hey, can you look at Lost and Found and see if you found this? And they did. And I said, well, it'd be really great if you guys would take a photo of, the stuffed animal like lounging by the pool or something. So it kind of goes along with my little white lie here to my son. And I think he was maybe 6 at the time, right? And so they took it and ran with it and actually created a binder. It came like 2 days later in FedEx, a big box, a whole bunch of Ritz-Carlton swag, as well as this binder of Joshy, getting a massage with, cucumbers on his eyes and, lounging at the pool and driving the golf cart as a member of security and all these different things that get sent a laminated security card. I guess the point is, I think what you're going at here, Ray, is this was an opportunity that somebody took and ran with to create a raving fan. And so much so that I wrote about it. This thing has now appeared in, I think, 9 books at last count. It's been on television shows in Australia and Germany. I still to this day get people reach out to me on LinkedIn and ask me for my permission for them to talk about it in a speech. And we went back years later and found out that everybody throughout the Ritz-Carlton system knows about this story. And it's become one of their training stories that they teach their people how to try to create raving fans through something like this. Now, how does that translate to SBA? I mean, again, it's some of the stuff we're talking about. It's having a process. It's being empathetic. It's buying your customers' products. I can't tell you how many times I hear a banker who says, yeah, I'll get you your deal. Why don't you send me your product and then I'll sample it or whatever. I never do that. I mean, you have to be careful if they send it to you because they want you to try it. That's one thing, and you need to be receptive and appreciative. But on the other hand, I'd rather spend money at my customers' business, because I want to support them. And that's something that I don't think a lot of people even think about. Like, I could stay at this hotel or I could stay at the hotel we financed. I could buy, corporate t-shirts from this place, or I could buy it from the company that actually does this for a living that we finance. It's just little simple things like that tend to make a huge difference.
Amazing. Javier, do you want to respond to what I was saying before about the this kind of like staffing models and how this, because like if we're hiring from the existing talent pool of SBA professionals, like how realistic is it that they're going to come into your shop and do things different than what they've been doing for the last 2 decades?
I mean, human nature is, change is bad, right? So adapting or changing what you've learned is always more difficult, in my experience, than learning from scratch. That being said, it always depends on the individual. I'm never going to say that a veteran or seasoned SBA person isn't able to change. I know a ton that have, but my philosophy has always been, train and retain, right? And give everyone the opportunity to grow and enhance and teach them your way, right? Which is the only way they know. And ultimately, you can control the user experience, the customer experience throughout, their life at your shop, right? Back to your point, Ray, it's all tied to culture, right? So, if you have a well-defined culture that everyone is bought into, then whether they're a veteran or fresh, they need to come in and drink the Kool-Aid, right? And if they're not, then unfortunately, they're just not going to cut them off, right? With our institution. We have a philosophy that we want to bring in. I think we talked about this before, Ray. We have rotation of new blood coming in every semester, and we rotate them through our department so we can challenge and expose them to the different parts. And also that benefits our existing staff because they get a fresh perspective, fresh eyes that just brings a little bit of a different perspective and challenges the entire team to stay ahead. We have the philosophy that if you're not progressing, you're regressing. And we're always trying to figure out a way to enhance and get better. I think the combination of what Chris and Charles have been talking about of, providing that extra experience, that value, that connection, that relationship. And furthermore, sometimes you can have raving fans when you tell them no, and you tell them the reason why you told them no, and you explain to them why that's not a good decision to lever up your business to 8 times what the industry standard is, because that's not a good plan. But then you say, hey, we have a different plan. We can grow with you. Let's start with this lower number. Let's hit these metrics, and then we'll see what happens later on. And we train our people that have that philosophy, right? To be able to set a plan, set the goals, set the expectations, and then walk the client along that process. And if they hit those goals, I mean, the beauty about this is those clients end up being the best borrowers because they're the ones that listen. They're the ones that take your advice. They're the ones that apply the changes or advice that's provided. And those outcomes, as long as that owner knows that you are looking out for their best interest, not for what's best for the bank, not what's going to enhance our margin, not what's going to get you off my desk and then moving on to the next deal, but this will help your business. This will allow you to grow with the institution. I think that's really where you have those long-term raving fans, right? And that's how you build it within the department and your institution.
Yeah. I mean, it makes sense. Like if you're already doing the job one way and you're hired into that position, it's going to be a lot harder to say, well, actually, this is the way you're supposed to do it. You're supposed to, take the borrower's stuffed animal and put cucumbers on its eyes. And, I'm just being a little funny there, but you get what I'm saying. So there's definitely something it's like it's another advantage of cultivating your own talent because you get to tell them right off the bat, this is actually the right way to do it. Charles, I want to just give you a chance to respond to what I said, because I want to kind of understand, because your approach is it's the most hand-holding approach I've ever seen, and it works for you. I want to understand why it works for you and why you do it that way. Why don't you just bang them out like I do?
I like to think I'm invested in my customer's success. And so, I don't get deals turned down very often because I know what ought to pass and I know what it takes to get someone to that position where they will pass. And so I feel like that's our job. I mean, I'm old school, but this is kind of how I came up, is that is my role, is to make it happen for this borrower. And making it happen sometimes means intervening in these small tasks and helping them navigate it without having to go back every 10 minutes and say, I need one more thing. I need C and double A and double B. One of the things we do in our shop, which, I wish we had a trade association that would address stupid little nuances like this in the SOP, but SBA doesn't want you to close on a loan before you have a business license. And of course, your county or your city may not give a damn what the SBA thinks. They're not going to give you a business license, which is, by the way, an occupancy tax certificate, until you are occupying the building. So therefore, anatomically, when I'm missing the word, you can't physically do it. If they won't
I messed up a lot of words on this one, so Don't worry about it.
So, they won't issue a business license until you occupy it. You have to have a lease or you have to have a deed. Okay. But so what our shop answers this, just so God forbid we lose that guarantee. They want to see an application for a business license before closing, along with a check written out to the entity, which is worse than ridiculous to me, but okay. So I don't embarrass my company by asking my client to do that. I go to the city or the county's website, print the thing out, fill it in, take a picture of it, tell them to sign it. My God, the world is saved. They've got an application sitting there just waiting to close. WTF. But that kind of thing, again, in childcare, as soon as that closing occurs, they've got to go start all over and do the same thing to get a childcare license transferred to them or to get it earned for a new location. So if I can soften the blow on what it takes to get through the SBA, they're in much better position for me and for Harvest by not having been exhausted and left on the curb through the SBA closing. I want to mention a book while I'm thinking about it, because a lot of things Chris and Javier have said are encompassed in a very easy to read, even for an SBA lender, easy to read. It's called How to Become a Rainmaker by a guy named Jeffrey Fox. I was at an airport one evening headed out to Arizona, and I forgot to bring a book. And I was panicking. And you go in the airport, it's James Patterson, or it's a very small list. And I found this book on a table, a guy named Jeffrey Fox, and I just picked it up. And I think I'd finished it by the time we were in the air. But it's such an easy read, and it's nothing you don't know about sales. It just reminds you, this is sales. This is how to sell. And they're all 2-3 pages. You can read them at a stop signal. But I bought one for everybody on my team, everybody on my board. I've bought one. I've probably bought 100 copies of that book right now. And at our bank meetings, I used to have somebody read a chapter, tell us about it, tell us why it's important to selling our bank. Great resource.
Yeah, that's a good one. I'm not sure where to even go from there, Charles. That was a lot, but thank you for that valuable insight. And I am going to probably 86 this last round of questions, just kind of go to each of you and just see if you have any final thoughts for this topic, and then we're going to wrap this up. Chris, anything to add?
I don't think any of this is complicated. I think you have to care enough to want to create raving fans. Like I said, just if nothing else for the humanity of it, but obviously if you do it, then you create more business for yourself and you have more fun in your job. So I always just think, treating people how you want to be treated is a really powerful thing. And so long as you've got that mindset and that kind of a culture throughout your organization, then I think you're going to create raving fans for your organization, or in Charles's case, for you as the individual.
Yeah, I guess if you're watching this, hopefully you do care, and the people that don't care are probably not watching this. So, Javier, want to wrap us up here?
What is your priority? Is your priority not to take any risk? Is your priority to make as much money? Or is it priority to have a great relationship with your borrower? If your priorities are in order, then you're going to work on making that happen. And I think we've discussed all the ways that you can prioritize your businesses and your clients on this podcast. But this is a decision that we all need to make every day when we wake up is what are we going to do? Are we going to try to help the borrower or are we just trying to check boxes? So, either you're part of the solution or you're not.
Yeah. You got to want to help yourself here a little bit. So, help me help you. So thank you guys for joining on this episode. This was a fun one. That does it for this episode. Until next time, ta-ta. All right, that's it for this week's episode. If you want more SBA content, you can sign up for our monthly newsletter and check out our sister shows, SBA Today and The BDO Show. We'll leave a link in the show notes. And don't forget to subscribe to this podcast so you never miss an episode of The Art of SBA Lending. Ta-ta.